On March 3rd, TSMC announced an additional investment of $100 billion in the United States, expanding its operations to 6 wafer fabrication plants and adding a research and development center, bringing its total U.S. investment to $165 billion. This move directly addresses a critical gap in the U.S. AI industry chain: manufacturing capacity.
It's now at the forefront of semiconductor technology.
In a joint statement at the White House, President Trump and TSMC Chairman Morris Chang emphasized that the world's most powerful AI chips will be manufactured in America, highlighting the strategic significance of this investment for the downstream segment of the U.S. AI supply chain. The White House predicts this will create tens of thousands of high-end AI industry jobs, further solidifying U.S. competitiveness in the AI sector. In contrast, China lags several years behind TSMC in advanced manufacturing processes, currently relying primarily on 14nm and above technologies. This U.S. initiative aims to weaken China's influence over the global semiconductor supply chain. At the same time, this decision has sparked widespread reactions in both the United States and Taiwan. Reactions in the United States. The U.S. government has expressed strong support and enthusiasm for this development. During the March 3rd White House press conference, President Trump, alongside TSMC Chairman Morris Chang, described it as the largest single foreign direct investment in U.S. history, emphasizing that it would enable the world's most powerful AI chips to be made on American soil, enhancing both economic prosperity and national security. Trump also noted that this move would shield TSMC chips from high tariffs upon entering the U.S., projecting the creation of 40,000 construction jobs and tens of thousands of high-skilled white-collar positions over the next 4 years. This stance reflects the U.S. government's strategic goal of bringing the semiconductor supply chain back to domestic soil, particularly emphasizing chip autonomy in AI and defense sectors. The U.S. tech industry widely believes this investment will strengthen its position in the global semiconductor supply chain. Analysts point out that TSMC's expansion to 6 fabs in Arizona, along with a new R&D center, will significantly boost U.S. capabilities in producing advanced chips like 2nm processes. Major TSMC clients such as Apple and NVIDIA are likely to benefit from enhanced supply chain security. However, concerns have been raised about costs, as building factories in the U.S. is approximately 50% more expensive than in Taiwan, potentially impacting TSMC's profit margins and indirectly driving up chip prices. U.S. public opinion generally views this as a symbol of manufacturing returning to America. The White House has highlighted its positive impact on employment and national security. However, some commentary suggests it could heighten tensions in the U.S.-China tech rivalry, particularly given Trump's portrayal of China as a potential threat. Reactions in Taiwan. Taipei's response has been nuanced. President Lai Ching-te, speaking alongside Morris Chang at a press conference, stated that the plan benefits TSMC, Taiwan, and the U.S., attempting to downplay speculation of political pressure by asserting there was no pressure from the U.S. However, this has not fully quelled domestic skepticism. Taiwan's representative office in the U.S. welcomed the move, stressing that it deepens Taiwan-U.S. supply chain collaboration. In contrast, the opposition Kuomintang, KMT, criticized it as evidence of Taiwan being hollowed out by the U.S., accusing the Democratic Progressive Party, DPP, of using TSMC as a bargaining chip to curry favor with America. Taiwan's business community has expressed significant concern. Lai Cheng-ai, honorary chairman of the Taiwan Business Association, warned that TSMC's large-scale investment in the U.S. could lead to an exodus of the industrial chain, affecting Taiwan's exports, employment, and economic growth rate, potentially jeopardizing this year's 3% growth target. Analysts note that TSMC's annual expenditure is approximately $35 to $40 billion. If over 60% of its investment over the next 4 years shifts to the U.S., combined with its plans for Japan and Germany, only about $10 billion may remain for Taiwan. This resource allocation has sparked fears of losing Taiwan's competitive edge in semiconductors, particularly with the R&D center's relocation to the U.S. raising concerns about technology leakage. Public sentiment in Taiwan has been notably intense. Netizens on platforms like PTT expressed shock and discontent, with comments such as, "The DPP is giving TSMC to the U.S. for free," and "TSMC is becoming USMC," viewing it as a betrayal of Taiwan. Former President Ma Ying-jeou criticized the DPP for using TSMC as protection money to secure U.S. backing, while former KMT chairwoman Hung Siu-chu called it putting Taiwan on the chopping block. In the markets, TSMC's stock fell below the end-to-$1,000 mark on March 4th, with the broader index dropping nearly 400 points, reflecting investor fears of profit dilution and technology drain. In the U.S., this investment is seen as a major economic and strategic victory, with the government and industry lauding its contributions to supply chain security and job creation. In Taiwan, however, despite official attempts to frame it positively, widespread domestic apprehension persists over the weakening of economic lifelines, technology loss, and heightened geopolitical risks. Trump administration's potential policy toward Taiwan. After taking office in early 2025, Trump's Taiwan policy will likely be driven by his America First and transactional approach, diverging significantly from the Democratic alliance framework of the Biden era. During Tsai Ing-wen's tenure, Taiwan aligned with Biden's global progressive narrative by supporting Ukraine and promoting LGBTQ issues. But Trump has little interest in such ideological alignment. Focused on economic benefits and military returns, he may impose the following demands on Taiwan. 1. Economic concessions. Trump has criticized Taiwan for stealing U.S. semiconductor jobs. While TSMC's $100 billion investment mitigates this accusation, he may push for further market openings, e.g. agricultural imports, or reductions in the U.S.-Taiwan trade surplus. 2. Military cost sharing. The Trump administration may revive the notion that allies should pay for their defense, demanding increased arms purchases, e.g. F-35 jets or missile defense systems, or even contributions to U.S. military presence in the Indo-Pacific. 3. Hardline stance against China. Viewing China as the primary rival, Trump may expect Taiwan to play a more active role in U.S.-China confrontation, such as through intelligence sharing or joint military exercises. This suggests that Lai Ching-te cannot fully follow Tsai Ing-wen's pro-Democrat approach and must offer more in economic and military terms. TSMC's investment serves as a stepping stone to build ties with Trump, but long-term trust hinges on whether subsequent negotiations meet Trump's practical benefits expectations. Lai Ching-te's diplomatic strategy options. Facing Trump's policy shift and Tsai's legacy, Lai Ching-te must strategically adjust U.S. relations while avoiding a complete break with his predecessor. Potential strategies include 1. Downplaying ideological outreach. On issues like LGBTQ and DEI, Lai could scale back international promotion, treating them as domestic matters to avoid clashing with Trump's conservative base. For instance, he might refrain from high-profile participation in global progressive events, focusing instead on economic and security priorities. 2. Engaging Trump's inner circle. Moving away from inviting sidelined Republicans like Nikki Haley, Mike Pompeo, and Mike Pence, Lai could target key figures in Trump's new team, dispatching envoys to the U.S., or inviting them to Taiwan to rebuild high-level trust. 3. Trading economics for politics. TSMC's investment is a starting point. Lai could propose further cooperation, such as joining the U.S. Chip Alliance, or signing a bilateral investment agreement to secure Trump's explicit support on Taiwan's trade issues. Lai's challenge lies in balancing this shift. Too sharp a pivot risks losing progressive DPP support, while insufficient adjustment may fail to appease Trump. He must navigate between de-Tsai-ification and maintaining party unity. TSMC investment's potential impact on cross-strait relations. TSMC's latest $100 billion U.S. investment not only affects Taiwan U.S. ties, but could also become a new variable in cross-strait dynamics. Beijing may view this as further evidence of Taiwan aligning with the U.S., especially under Trump's anti-China stance, potentially prompting economic retaliation, e.g., restricting Taiwan's semiconductor exports, or military intimidation, e.g., larger-scale Taiwan Strait drills. Lai's administration must gauge Beijing's red lines to avoid triggering full-scale confrontation over economic ties to the U.S. The investment has already sparked domestic unease in Taiwan, with the KMT labeling it selling out Taiwan, and the public fearing technology drain and job losses. Lai needs policies, e.g., subsidizing local semiconductor industries or pledging to keep R&D in Taiwan, to mitigate backlash or risk undermining his governance. TSMC's global expansion, U.S., Japan, Germany, enhances Taiwan's strategic value between the U.S. and China, but complicates Lai's balancing act. He must ensure U.S. investments don't sever cross-strait economic links, while preventing Beijing from misjudging this as total westernization. How TSMC's investment could aid. Lai Ching-te TSMC's $100 billion investment could become a cornerstone of Lai's U.S. policy recalibration. Appealing to Trump, the investment directly generates jobs and economic benefits, aligning with Trump's performance-driven agenda. His personal endorsement at the March 3 press conference underscores its significance. If Lai leverages this to propose further cooperation, e.g. odd energy or infrastructure projects, he could quickly mend ties with Trump's team. Repositioning Taiwan. By emphasizing TSMC's role in securing the U.S. AI supply chain, Lai can shift Taiwan from an ideological ally to an economic strategic partner, sidestepping contentious issues like LGBTQ rights. Easing cross-strait tensions. If Lai can signal to Beijing that the U.S. investment aims to maintain global competitiveness rather than political alignment, it might reduce hostility and buffer cross-strait pressures. In summary, Lai's domestic challenges stem from Tsai's deep alignment with Biden clashing with Trump's conservative shift. He must distance himself ideologically from his predecessor, pivot diplomatically to Trump's inner circle, and use TSMC's investment to reshape U.S.-Taiwan relations. Simultaneously, he needs to balance domestic sentiment and cross-strait dynamics to avoid excessive Western tilt. Success could turn TSMC's investment into a turning point for stabilizing his tenure and elevating Taiwan's status. Failure risks leaving Taiwan vulnerable in the U.S.-China divide. This is a high-stakes diplomatic game, with outcomes that will profoundly shape Lai's presidency and Taiwan's future. Strategic intent to break free from CCP control. For the Trump administration, the overarching goal of these moves is to restructure the upstream resource supply chain of the U.S. AI industry, reducing dependence on China. Through export restrictions, e.g. the 2020 threat to ban rare earths to U.S. firms, and low-price competition, China has long suppressed Western mining development. Trump's resource diplomacy, from TSMC's manufacturing prowess to rare earth access in Greenland, Ukraine, and Russia, seeks to forge a de-Sinicized supply chain loop. Downstream, TSMC's investment ensures U.S. production of cutting-edge chips for AI and defense needs. Upstream, multilateral agreements secure rare earths and critical minerals, breaking China's monopoly. This Trump-style geopolitical strategy, leveraging economic interests, aims to strengthen ties with allies and potential partners while curbing China's technological rise. From a geostrategic perspective, Taiwan occupies a central position in the first island chain opposing communism, making it a focal point of U.S.-China contention. Unlike neighboring South Korea and Japan, Taiwan hosts no U.S. troops due to historical reasons, relying heavily on its own defense capabilities. Trump's first-term arms sales greatly bolstered Taiwan's self-defense, particularly in 1. Air defense. The addition of F-16V jets upgraded Taiwan's Air Force from aging F-16A/B models to fourth-and-a-half-generation fighters with AESA radar, capable of countering the PLA's J-20 stealth aircraft. Delivery of 66 new jets, expected by 2026, will expand Taiwan's air fleet to over 200 aircraft. 2. Asymmetric warfare. Harpoon missiles, SLAM-ER, and HIMARS systems bolstered Taiwan's porcupine strategy, enabling cost-effective high-impact strikes on PLA ships and ground targets in a Taiwan Strait conflict. 3. Land deterrence. M1A2T tanks replaced outdated M60A3s, modernizing Taiwan's armored forces to better counter landing threats. 4. Intelligence and precision strikes. MQ-9B drones provide ISR, intelligence, surveillance, reconnaissance capabilities, paired with HIMARS rockets for a detect and strike system. The combined effect of these weapons shifted Taiwan from traditional static defense to multi-layered deterrence, posing a greater challenge to the PLA's amphibious and air superiority. In terms of quantity, quality, and value, Trump's first-term arms sales were unprecedented, equipping Taiwan with modernized assets from fighters to missiles, significantly enhancing its self-defense. This policy not only altered the Taiwan Strait's military balance, but laid the groundwork for his second term. However, the long-term impact depends on Taiwan's absorption capacity and the evolution of U.S.-China rivalry. Looking ahead, Taiwan may gain more under Trump's transactional diplomacy, but it must weigh economic costs against potential cross-strait fallout. Thanks for watching. See you next time.